This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. It's a Wednesday morning. We are waking up to calm, settled kind of cues from the US. No big push through higher. And the market here, though, for the last 4 sessions has been very strong. I'm Prashant. With me, my colleague Sonia, and Surbi is joining us today. Guys, hi, morning.
Hi, good morning to both of you.
Good morning, Surbi. Good morning, Prashant. And we're near lifetime highs, just cruising along, waiting for that level to get hit, right? And a lot of cues to track this morning. So I think it's going to be a long day. You have the GDP numbers also in the evening. So lots of cues to reckon with, I guess.
A lot of cues, Sonia. And, you know, the fact is that the market here has been strong, right, for the last, 4 sessions now. Actually longer, because there was that one session where the market dipped a little bit. But otherwise, it's been pretty strong. I'll get to that in just a bit. But there's no big push from the US markets overnight. And that's what I want to start with. This is not significant, but this is meaningful in that sense, noteworthy rather, because the last session in the US before last night was Friday. And Friday, we saw that big push higher on the NASDAQ, which was up about 2%, the S&P, which went up 1.5% as well. And then Monday was a holiday, and then we had yesterday's session. And yesterday, US equities consolidated and fixed income rallied. But the price action has been counterintuitive because data out of the US has been strong. Even, for example, last night we got the consumer confidence numbers, which tells you that the US consumer is in pretty good shape. But what happened? Yields fell, sort of bonds rallied, and you had, equities which didn't really go anywhere by the end of it. S&P was absolutely flat. NASDAQ was up about 1/3%. And you also had the Dow, which was actually down a little bit. One has to remember, though, that the rally out there in the US this year, the S&P, for example, is up 10% YTD. It's been largely led by about 5 or 6 names. Actually 6 stocks on the S&P have contributed to over 100% of the S&P 500 index. I mean, there are 500 stocks and 6 of them responsible for over 100% of those full 10% gains YTD. Anyway, we'll get to that in just a bit. So it's been narrow. That's the point. Oil sold off last night. So you had Brent, which was down about 4% or so. There is I think, an OPEC Plus meeting which is coming up. There was a Wall Street Journal article talking about tensions between Russia and Saudi Arabia. In any case, there was a big dip, which is not bad news for a big importer like India if the prices stay here. Now we come to the market in India. The Nifty, as I said, it's been up for 4 sessions and it's accumulated 350 odd points in these 4 sessions. It's not much. That's about 1.92% or so, 355 points on the index. But the fact is, it's been moving up consistently. Flows have been very supportive as well, which we will get to in just a bit. So some levels really. SGX this morning is indicating a lower start, so keep these levels in mind. The upper end of the rising channel for the Nifty stands at 18,792. We are 1 day and 1 step closer to the all-time high after yesterday's session. We are not very far away, but intermediate levels are 18,792. That's point number 1. On the lower end, the Nifty should not break. I mean, if there is a bit of a profit taking which emerges, should not break 18,420. This level remains unchanged. Actually, both remain unchanged from yesterday's session. For the Bank Nifty, which has also moved up, of course, which has been hitting newer highs, the first target now stands at 44,800 on the way up, which is about less than 400 points from here. Supports stand at 44,100, which is the 40-hour exponential moving average. Just trying to sort of put out some levels very close to where we are. So 44,100, but the bigger one is the 20-day moving average, which stands at 43,705. I would say perhaps a bit of consolidation is due. Will we get it immediately? The SGX is indicative of that. The impulse has been to try and buy the dip, but you don't have to try and buy every dip. That's the beauty about this game. If you're trading, you're investing, you don't have to play every ball. You wait for a sort of clear and clean ball and then take your shot. So that's where we are at. SGX is indicating a start which is around 18,660. Out of the US, there will be a little bit of trepidation around when the debt ceiling agreement goes up for a vote, and that perhaps may happen today, that may happen tomorrow. So I think around there we may see some volatility. Maybe the SGX is indicating of a little bit of that this morning as well. Sonia.
Absolutely. It also feels a little bit like a marathon, right? I mean, you're running hard, running fast, and then there comes a time when you just take a little bit of a break to gather all your ammunition and run again. I think that's what the market is doing right now, just consolidating. Remember, it's been 4 straight days of gains on the index, and this morning as well, we do have a lot of other positive cues too. Brent crude is down about 4% overnight, so that's going to help our own markets. But if you just map the trajectory from the month of March, right? I mean, we're already, in June almost. So March to June, the Nifty has now gained almost 10%. The lows that we hit in the month of March were somewhere to the tune of 16,900 or so. And from there, the market has climbed about 10%. So it's been a pretty smooth run that we've had up until now. Overnight, the flows are a bit mixed. FI buying is very, very strong, over 2,000 crores of buying. But domestic institutions have actually sold in the cash market. So they sold about 438 crores or so. In that context, this morning, you could see a little bit of a dip. That's what the SGX is suggesting as well. The Dow has also been under a little bit of pressure. Remember, the US debt ceiling bill for all practical purposes has been cleared, but just the final announcement is pending. And the final vote is pending, so we're going to watch out for that very closely. There's a Monday deadline to address the debt ceiling issue. So, in the run-up to that, there could be a little bit of volatility. A couple of cues to track on the local front. You have the MSCI Global Standard Index rejig that will come into effect today. And the important bit is there are exclusions in the form of the Adani Group stocks and Indus Tower, and inclusions in the form of Hindustan Aeronautics, Sona BLW, etc. There's in fact a large trade on Sona BLW as well. We talk about that in greater detail. And then you have the March quarter GDP data that comes out in the evening. Now, this is generally backdated information. We already got corporate earnings, so in a sense, we know what the GDP would be like, but it's expected to surprise positively, and that's something that we will be working with as well. The estimate is 5.1%, better than what we saw last quarter. But, so it'll be the sense that you get when you track the market is that this is an uptrending market, but it's just that this level of 18,500, 600 is something where it gets a bit sticky. You need some kind of fresh ammunition to take it above that, I guess.
That 18,887, right? That's been just elusive. The bulls have been waiting a while. It's 1.5% away, really, from that all-time high on the Nifty as well. And perhaps it's a question of when and not if. Well, at least that's the mood on the street as of now. You guys forgot the most important cue. Earnings season is finally coming to an end. So we are done with, the hordes and hordes of numbers that we had through the course of the last two odd months. So with earnings out of the way, what next? Can it just be the final, deal getting done? Yesterday, the vote was, by the way, 7-6. That was the House Rules Committee. The actual voting is slated for Wednesday night. Now, that's Wednesday night, US time as of now. So basically, we come back, hopefully with more clarity, Thursday morning. That's the kind of schedule that's been put out, at least as of now. I just want to mention that the DII selling that we saw, this was the first DII sell number for the first time in 7 days. So that was interesting. It was not much of a sell number, just about 430 odd crores. But after 7 consecutive days of very heavy duty buying, we had a minor profit taking from domestic institutions. FII flows are rock solid. I mean, the numbers are absolutely ginormous. Look at that. The tally for May is touching over 41,000 crores. That's the FPI number coming in. By the way, on just another further point on the MSCI changes, the expectation, according to some brokerages, is that net inflows into India could be to the tune of 500 million. That's a lot of the passive money that will come in that's following the MSCI indices. Kotak Mahindra Bank becomes a key watch point because in terms of weight changes, Kotak was always in the index, but it has seen the maximum weight gain on the upside, and the expected inflow for Kotak is almost 800, I forgot to add a million over there, that's my bad, $800 million for Kotak Mahindra Bank. So some of that action perhaps could keep individual stocks excited. Though, of course, these changes will be effective today. They were announced earlier in May, so a lot of that is already in the price. But I guess plenty to keep us occupied through the day.
Oh, absolutely. Lots of, lots of stocks, lots of sectors. So let's get cracking very quickly. In the next 2.5 hours, here's what you'll get to see. First up on the equities front, we have Pedro Martins Jr. of JP Morgan, who says they met institutional investors in the UK and Europe last week. They heard number one positive news regarding technology companies in Asia outside China, that is mostly Korea and Taiwan. Number two, they heard long-term positive views on India, which continues to clash with near-term derating risks due to high domestic rates and slower GDP growth. And finally, thematic interest remains in ASEAN as beneficiaries of China reopening and geographical diversification of supply chains.
All right, let's get you some money market views as well. On the rupee, Kunal Sodani of Shinhan Bank says that the debt ceiling deal struck between US President Joe Biden and House Speaker Kevin McCarthy is facing hurdles. Dollar index witnessed intense selling pressure after printing a fresh 10-week high at 104.5, while the US 10-year Treasury yield and Brent cooled off. USD INR, according to Kunal, should see 82.5 to a dollar as support and 82.85 to a dollar as a resistance level.
Okay, and on the bond market, Neeraj Gambhir of Axis Bank says the 10-year benchmark bond yield traded in a range of 6.98 to 7.03% post the FOMC minutes and expected resolution of the US debt ceiling. The markets are now looking forward to the MPC meeting next week, while the RBI is expected to continue with a rate pause. The language around policy stance and liquidity management will be keenly watched. Neeraj expects the 10-year benchmark to trade in a range of 6.95 to 7.05% for the rest of the week.
All right, we have lots of stocks to track today, and in just a bit in our special top 10 segment, we'll be looking at all of them, and the list today includes Coal India, Sun Pharma, HDFC Life, Torrent Pharma, Mankind Pharma, Prestige Estates, and Lemon Tree Hotels. These are on the radar on the back of positive news flow. Also, Sona, BLW Precision, All Cargo Logistics, Patanjali Foods are some of the stocks we are tracking on the red side today.
Well, lots to track, so let's get this ball rolling. Harold van der Lind is head of Asia Equity Strategy at HSBC. Harold, great to have you with us here. Thank you very much for your time. As we read out that call from a JP Morgan global analyst who said that, well, remain very positive on India. The structural drivers are in place, but near term, risk of derating because of high domestic rates and perhaps a little bit of downgrade to growth estimates, etc. How are you feeling about the Indian markets and where we are at? We're almost at new all-time highs. Go on, Harold.
Well, we feel pretty good, actually, about Indian markets. It's one of our top big markets. We've been overweight since, late last year or something like that. And at the beginning of the year, India struggled a little bit because all the money was going into China. But yeah, you see that there's a bit of an underwhelming cyclical recovery coming through in China. The earnings actually look okay, but there's worries that maybe this is a little bit of a slow recovery there than it is. So people have reallocated to India. If you now look at India itself, the earnings come through pretty okay, particularly on the domestic side. Valuations are lofty. Yes, maybe there's a bit of compression taking place, but if you got 20% earnings coming through this year, yeah, maybe the PEs come down a little bit, but that gives you still maybe 10-15% upside in Indian equity. So it's a market we like.
Okay, so you've been optimistic on India ever since I've known you. I mean, you're the perennial optimist, right, Harold? I think last 10, 15 years. And that's great. I mean, it's worked out. It's worked out very well for you. But just wanted to put some numbers to that. You said a 10 to 15% upside in the near term. Where do your preferences lie in terms of individual sectors? Because clearly banks have been the big leaders. IT has taken a bit of a back seat. But you folks have been bulls on IT for a very long time as well. From here on, what do the sectoral preferences look like?
I think the way to approach India to a very large extent is not to look at the sectors just as such, but actually look at another theme, and that is distribution capabilities, getting to local Indian consumers. And that could be a bank, that could be a retailer, that could be an auto company, anything like that. That's what we like to a very large extent. So we like the domestic sectors in that sense. We like the banks, we like the consumer sectors, but it's the one that have good distribution capabilities that's of importance. And that might sound logical, but I think in China, it's not distribution I'm looking at, it's brands I'm looking at. India, distribution capability. So yeah, jewelry retailers, food manufacturers, cigarette companies, you name it, all of that stuff.
Very interesting, Harold. Interesting to hear that approach. But let me just pull back away from India for a bit. Of late, one keeps hearing of a narrative around China, which isn't very reassuring in terms of, I'm just trying to ask you whether you think that's a new emerging risk. Just this morning, I was reading a piece on the property market there where the pace of price rise isn't as fast. Basically, once the US debt ceiling is behind us, we're over and done and above that hill. Do you see any other cloud on the horizon?
For China, I see many clouds on the horizon. There are quite a few challenges that they need to sort out over the course of not only this year, but over the course of the next couple of years. That means ensuring domestic growth is continuing. There's a debt problem that they need to deal with in China over the next couple of years. So there's plenty of stuff for that to do. However, sentiment and valuations on China is extremely poor at the moment. Sentiments is pretty much at a 10-year low. Valuations are extremely low. The earnings actually are not too bad. They've been upgraded in China over the last couple of months because the expectations from the analysts were so low as well. So actually, from a pure equity point of view, things look okay in China. And if then the global macro and the dollar and the bond yields move in the right direction, China is quite sensitive to that. That would help that particular market as well. But yeah, unlike India, where I feel very comfortable to say probably over the next 3 years, you're going to have on average 15 to 70% earnings growth. I do not have that confidence to say that in China over the next 3 years.
Although, Harold, here in India as well, earnings growth is, we're not seeing upgrades. For the last at least 2 or 3 quarters, we are seeing full year estimates being brought lower. I mean, small, but at a headline level, that's what we've been seeing. Just a quick point, Harold. This entire talk of, waiting for this recession, I mean, it's been the most overused, jaded kind of thing. Maybe it's a timing thing and perhaps at some point later this year, but timing matters, right? I mean, how do you think about this? Go on.
Absolutely. So 12 months ago, literally, what is it now? It is the end of May, right? Early June. Gas prices in Europe were rocketing higher. There was a war developing in Europe. The consumer was seen to be fiddle, and everybody said Europe is going to be in a deep recession by the end of this year. Turns out it's not. And by that, 12 months ago, we also thought that the US would already be in recession. Turns out it's not the case. There's much more robustness in these economies than we as markets, I say, originally anticipated. And that meant that a whole repricing had to take place. Bond yields had to go higher, interest rate expectations had to go higher, inflation expectations had to go higher. That's absolutely right. And the feeling is now that probably this is just being postponed for the next 12 months. It will happen. But if you then look at the markets that have done very well, that is Korea, that is Taiwan, that is Japan. Those are global cyclical markets. It's those markets, those exporters that have been repriced and have done very, very well over the course of the last 6 months or so.
All right, Harold, we'll let you go on that note. Thanks a lot for joining in. It was a quick call today, but we'll do a detailed one at another point in time. Looking forward to that. Thank you for joining us. That's Harold Vanderlyn of HSBC. He's been a long time India bull and continues to remain that way. Let's slip into a quick break. On the other side of the break, our entire team will be joining in to help you prep for the day and give you all the top 10 stocks to watch out for. Stay tuned.
इंश्योरेंस कोई आरओआई नहीं है। एमएफ ईयर चेक कर, हाई होगा। क्या है?
आप बीपी चेक कीजिए, हाई होगा। हाई बीपी से सीकेडी हो सकता है और उसके ट्रीटमेंट से आपका टोटल लाइफ सेविंग्स खत्म। एसएचआई ले लो।
एसएचआई
स्टार हेल्थ इंश्योरेंस। अपनी सेविंग्स को बचाइए स्टार हेल्थ इंश्योरेंस के साथ। द हेल्थ इंश्योरेंस स्पेशलिस्ट।
This car's electric for more reasons than just being woke.
Oh yeah.
And man, the money it saves you is no joke. It's got enough range to get you anywhere.
And it's the go-to park when you get there.
The all-new MG Comet EV, the no-nonsense car.
Because just like us, this car cuts the crap, man.
What does your investment portfolio look like without gold? Incomplete. Because as a gold owner, you have the power to make bold decisions. To balance risks and returns. The power to buy and sell right at your fingertips. Making gold your strategic advantage.
Without which your portfolio is incomplete.
Power your portfolio with gold. World Gold Council.
नई कार तुमने कार इंश्योरेंस खरीदा होगा आगो ऐप से नहीं
आपको
नहीं तो कोई बात नहीं मूर्ति गलतियां होती रहती हैं कोई जरूरत नहीं है चेक करने
नई कार खरीदने से पहले आको चेक करें और 36,000 तक बचाएं।
We don't just design new cars. We create new ways to design all cars. In fact, we make the whole world of India's mobility. New forever.
Welcome back to Bazaar Morning Call. Let's begin the day with a lot of stocks in focus. And one of the big stocks today could be Coal India, because the company has approved a price increase of 8% over the existing notified prices. And this is the first big price increase we've seen in a long time. Vivek is here to give us the latest on that. Vivek, over to you.
Well, good morning. Absolutely right. It's a much anticipated move after the wage revision agreement that was signed. The street was awaiting a price hike that would come through as far as Coal India is concerned. Like you mentioned, 8% increase as far as high-grade coal of grades G2 to G10, basically G11 onwards, which is the power sector. There has not been any price hike that has been indicated. So what the company says is that this particular year, they will earn an incremental 2,700 crores worth of revenue for the balance of FY24. Now, what is the proportion of volumes at Coal India production will actually be impacted by this? Almost 30% of the volumes would be impacted. So it's a positive development. In fact, Nuvama has written a note on this particular development. Basically, what they're saying is that grades G11 onwards, which are largely used by the power companies, are beyond the scope of this particular hike. Hike implies almost a 3% hike as far as the FSA prices are concerned, and they have gone ahead and raised their FY24 EBITDA estimates by close to 7%.
All right, Vivek, thank you very much for that. So, Coal India is a stock to watch this morning. We, by the way, will ask Ashish Kejriwal of Nuvama Institutional Equities how much he's upgraded his Coal India earnings estimates by, and that conversation will come up in just a bit from now. But let's focus on Sun Pharma. Ekta is here to tell us why. Ekta, morning.
Thanks for that. Well, yes, it's definitely positive news for Sun Pharma, because they've announced that China's regulator, which is the NMPA, or the National Medical Products Administration, has approved tildrakizumab injection, or Ilumetri. Now, what exactly is that? Is that it is a part of their specialty business, which is sold in other markets as Ilumya, which is used for plaque psoriasis or severe plaque psoriasis. Now, with regards to this Chinese approval, Sun has a 15-year out-licensing agreement with the pharma company CMS. This particular innovative drug is important because it's already being sold globally by Sun in other markets such as US, Japan, Canada. Like I mentioned, it's branded under Ilumya and is one of the biggest selling drugs for Sun in their specialty portfolio. It generated $477 million in FY23, and they've guided that that will be one of the key drivers in FY24 as well. Remember that the street is extremely bullish on Sun's specialty franchise, and China could be the largest market for them outside of the US for this particular drug. Hence, you can expect the stock to be in the green today.
Okay, so that's some good news coming in for Sun Pharma. Ekta, thanks very much for that. Let's move on to HDFC Life. Abhishek, tell us more. We're expecting a block deal today to take place?
Well, it's a clean out trade that might happen in trading session today. So, Aberdeen Mauritius Holdings is looking to sell their entire stake in HDFC Life. The offer price is between 563 per share to 585 per share, which is a discount of up to 3.75% if at all they give a discount. So, the offer size is for 3.57 crore shares, or about 1.66% of the holding. So, that's the entire holding that they have in HDFC Life. So, the size of this deal could be about 2010 crores. It's a clean out trade because this is the last tranche of holding by Aberdeen in HDFC Life. Buffer Securities is the broker to the issue. Back to you.
All right, Abhishek, thanks very much for that. Let's go back to Vivek, who's standing by with Sona BLW. Vivek, morning again.
Well, that's right. So, Sona BLW, expect a lot of volatility on this particular name today. So, as per our sources, what we understand is that a pretty large block deal is expected in the stock today. Total size of the block is almost 950 crore, and the base size is 600, with the remainder being an upsized green shoe option. The floor price at which the block is expected to take place is at 500 rupees a share, and the promoter entity, that is Aureus Investment, is looking to sell up to 3.25% stake in the company. Remember, they held almost 33% stake at the end of the March quarter. Now, what is more interesting is that towards the second half of the trading session, remember, effective tomorrow, the stock will be part of the MSCI Standard Index. So, analysts are anticipating inflows of close to $175 million in the stock today. So, expect volatility on both sides in this particular name today.
Okay, thanks a lot, Vivek, for that. But I'm watching Mankind Pharma very closely because this is the first quarter after listing that the company has reported numbers and they're looking very good. Ekta is here to tell us more about that. Torrent Pharma is also on her list. Ekta, over to you.
Well, I'll start with the older one, Torrent Pharma, which is actually considered a peer to Mankind. So Torrent Pharma, largely in-line set of numbers, revenue up 17%, estimates for 16% growth, margins 29%, bang in line with estimates. Profit also 330 crores, Street was anticipating 326 crores. India continues to grow, it was up 22% year-on-year. US markets were flat, Q-on-Q $34 million, impacted by price erosion. Brokers are positive, Nirmal Bang buy, target price 1717. Branded business growth remains intact according to them. Antique, they maintain a buy, they've hiked their target price as well. According to them, the Curatio integration plus OTC foray, which is over-the-counter drugs, will aid margins going forward for Torrent. Mankind, first quarter after listing and no surprises, revenue up 19%, EBITDA 416.6 crores, margins 20.3% versus 16.5% and profit 285 crores. Chronic segment, which is around 35% of their sales in India. Remember, they get 97% of their sales from India. So chronic segment grew 25% versus the industry growth of 15%. So that's growing rapidly for them. Consumer healthcare, which is basically all your brands which you know, such as Prega News, etc. That business was up 10% on a year-on-year basis.
All right, so solid show from Mankind. Ekta, thanks for the details there, both on Torrent and Mankind Pharma. We're not done yet with the earnings. Manglam's rounding up some more of the interesting numbers. Manglam.
Well, I have three on my list today. We start with Lemon Tree. It's the highest ever quarterly EBITDA margins, revenue, as well as the net profit that the company has reported. The good run for all the hotel companies, continues. The stock has seen a big rally, not just this month, over the last 1 year or so as well. Revenue is 111% higher. The EBITDA, hold your breath, 550% higher, margins upwards of 55% as well, and the net profit at 59 crores versus a loss of 39 crores. Their average revenues per user is up around 29% versus pre-COVID levels. The occupancy also has increased both quarter on quarter and year on year. The other one is All Cargo. Any company that has anything to do with the sea this time around has reported a decline, and that's largely because ocean freight yields are down 30% year on year, and the ocean freight index itself is down 77% year on year. And as a result of which, All Cargo's revenue is down 38%, EBITDA down 63%, and the net profit down 75%. See red out there. And weakness is what we've seen on Patanjali Foods as well. The weak business in their core edible oils business, and the FMCG business has grown as per expectations, but 18% overall revenue growth was largely led by the FMCG business. EBITDA has actually dipped by 20%, and the net profit actually has increased largely because of lower finance costs and lower tax outgo as well. If you just take a look at their segments, edible oil EBIT actually declined by 62%. Food business tripled over the last year.
All right, Mangalam, thanks very much for that. Prestige Estates, we will be speaking with the management a little later, but let's get the numbers out. Sonal is here. There's news flow as well. Sonal, over to you. Morning.
Good morning, Prashant. Well, of course, we knew the pre-sales and the bookings number already, and they were at a record high in FY23. But quickly taking you through them yet again, 25% higher is the number on total sales at 12,931 crore rupees. Collections have also risen by 31% to come in at 9,805 crore rupees. The company has made acquisitions in 2 commercial properties. The balance 50% stake that they had to buy. The first is in Prestige BKC Realtors, where the acquisition has been done from DB Group. Here they will be taking up their stake from 50 to 100%, and the consideration is around 979 crore rupees. The second acquisition is in Turf Estate Joint Venture LLP. Again, here they are raising it from 50 to 100%, and the total consideration is 198 crore rupees. So a little over 1,000 crore rupees is what they are paying for these 2 acquisitions. So we'll get more details on why they did it and more outlook as well. We'll be speaking to the management very soon.
All right, thanks a lot for that. So as Sonal told you, we'll be catching the management at 9:30 a.m. on Bazaar today. So you don't want to miss out on that one. In any case, real estate stocks have been the big movers in trade. All right, here's a quick recap of our top stocks. Stocks with positive news flow. There's Coal India, Sun Pharma, HDFC Life, Torrent Pharma, Mankind Pharma, Prestige Estates and Lemon Tree Hotels, while stocks with negative news flow, Sona BLW, All Cargo Logistics and Patanjali Foods. But there's also another big development in the commodities market. You had a sharp slide in crude prices overnight, about 3-4%. Let's find out more. Manisha Gupta joins in for all the action there. Manisha, morning.
Morning, Sonia. Thank you for that. Well, yes, we have seen 4% of a decline in the crude oil prices, and we are back below $70 a barrel for the WTI crude prices. And with this, the crude prices have declined by 9% for the month of May itself. While the markets are awaiting cues for the raising U.S. debt ceiling deal there, we already are working with the China manufacturing PMI data slipping for a second straight month in the month of May. The Chinese numbers all have been on the weaker side. That has been weighing. And apart from that, it is the June 4th OPEC and allies meeting, which the street is watching out for. Apart from that, the CME Fed tool shows that there is now a 65% chance of a 25 basis point rate hike on 13th and 14th of June. That is when the next US Fed meeting is. So ahead of that, there is some profit taking that we've seen come in for longs. It is a decline that you are seeing in metals as well. Most of them have seen 1 to 2.5% of a decline overnight. The only thing that's trading in positive right now is gold. Apart from that, most of the metals have started Asia on a weaker note.
All right, well, Manisha, we'll keep an eye out on oil prices, important, and it's got so much, it shows up in so many places if prices go up or down. We'll take a very quick break here. We'll connect with Ashish Kejriwal of Nuvama Institutional Equities, and we talk about that coal price increase, the FSA price increase, which Coal India is affected. We also have Devin Choksi of KR Choksi to talk about other stocks, results, non-results, and what should be in action today. Stay with us.
That's the boss's cabin. The canteen is behind. Good morning, ma'am. Good morning. And you are here. Good morning. Good morning.
मैम और कोई ऑप्शंस
लाइफ में और कहीं ऑप्शंस मिले ना मिले, मोतीलाल ओसवाल आपको देता है ऑप्शंस ट्रेडिंग में ऑप्शंस। इंट्रोड्यूसिंग मोतीलाल ओसवाल ऑप्शन स्टोर विद अ वाइड रेंज ऑफ ऑप्शंस इन ऑप्शंस ट्रेडिंग। एक्सप्लोर करो ऑप्शन स्टोर। Investment in securities market is subject to market risks. Read all the related documents carefully before investing.
CNG is good, but to get something, you have to give up something.
OMG! It's CNG! Big boot, big appeal, big reaction. OMG! It's the Altroz iCNG.
तू है तो मुझे फिर और क्या चाहिए, तू है तो मुझे फिर और क्या चाहिए।
हमारी प्रार्थना होगी स्वीकार। Z Black Premium Agarbatti and Dhoop, official prayer partner, Delhi Capitals.
You know, I was a bright student. I wanted to do something, to be someone.
Why not start something of your own? Start a business. That would require a big investment. Zero investment.
Zero investment?
Yes, I am doing it. I am. Principal madam. She's my client. I am an LIC agent. Now think big. Become an LIC agent. Visit our website or contact your nearest LIC branch.
Welcome back. So, slight caution if you're looking at markets across Asia, and the SGX has been indicating pretty much the same. In fact, last time I checked, we were looking at about a 60-point drop, and that's still the picture, 70-point drop as we speak right now. But let's put the spotlight on a big development that impacts Coal India, and favorably in this case, because finally, after many, many years, there is a price increase that we're seeing, not on all grades of coal, but on some of the premium coal grades for sure. And the effective increase is about 8%. Ashish Kejriwal, Director Research, Metals and Mining at Nuvama, is joining in to help us sort of decipher the numbers. Ashish, morning. Good to have you on the show. Now, I've been going through a lot of the notes that came in from last night, and it seems that this at least partially offsets the higher wage impact that Coal India was reeling under. To what extent does it help? Some of the estimates say up to 50%. Coal India will get 2,700 crores because of this price increase. By how much do your estimates on the stock go up, if at all?
Yeah, hi, thanks. Good morning, and thanks for inviting me to the show. See, as you rightly pointed out that, Coal India has increased prices after 5 years, actually. And when you look at the numbers, their employee cost, because of their earlier negotiations with labor unions when they increased prices by around 19%, the employee cost, overall cost impact on P&L should be something like 5,500 to 6,000 crore per year. Whereas when they have increased these prices, selective price increase in FSA, that will help them in 2,700 crore for rest of the year, which means around 3,200 crore at least for the year. I'm talking about on an annual basis. And one has to keep in mind that, going forward also, you have to increase volumes, and this price increase will be related to that also. So 3,200 crore per year is on account of right now, that is in FY24 volumes. But in FY25, when volumes again increase by 5%, this can increase to around 3,800 crore also. Besides that, and this will justify, you can say, around 60% of their wages, which can be rectified on that. So in one shot, they have taken 60% impact nullified in that. And second thing is what they are doing is that they are increasing the volumes also, which will offset the impact of higher employee cost. So overall, after this structure, we have increased our FY24 EBITDA by around 7%, while keeping FY25 flat, because we have earlier taken into account that price increase will happen only after general election year next year. So I think I will treat it as a positive development only.
Sure, got that. So it's a positive development, and you've increased the FY24 EBITDA by 7%. What about the price target? Because, the stock in the last 1 year, if you look at it, it's up about 25%. It's gone from 200 almost to 250 now. Is there further upside in the stock? If yes, how much? And apart from EBITDA, on the EPS as well, have you raised your targets?
Okay. So our target price is 365, which obviously gives around 50% upside from the current level also. So you have, and in terms of EPS upgrades, it's around 3.5 rupees, which is around 8% increase in EPS also for FY24. See, the stock has outperformed in last 1 year. One has to keep in mind that within the metals and mining space, this is the only company where we have seen earnings upgrade. And even if global coal prices falls, FSA prices are still at more than 70% discount to landed cost of import. So, in FSA, it's mainly because of inflation in India, because of which they were unable to increase prices for power sector. Else, FSA price can increase further from here, which we think it can happen post general election next year. So our performance was mainly because of increasing earnings estimates, as well as no risk of fall in earning estimates from the current level also. So I think outperformance should continue. In a day or two, I can't say anything, but yes, that opens the door for 300 plus for the stock. Because right now, if you look at on the valuation, trading at 2.5 times EV/EBITDA, 5 times PE, 8% dividend yield, 20 rupees dividend easily they can give for foreseeable future. So in this scenario, when I'm seeing that downside risk is limited in the stock, in the sense in EBITDA, and valuations are very supportive. It's local India focused. So global whatever scenario is there, that is not going to impact their numbers. So I think this is one of the best stocks which we like in the metals and mining space.
Okay, well explained. Ashish, stay with us. Devin Choksi of KR Choksi is also joining us now to take some questions. Devin, good morning. Good to have you with us here. Yesterday was, maybe with the Fin Nifty expiry, Devin, but we had these, all the financials, Bajaj Twins, Kotak, HDFC Life. We saw a fair bit of traction here. Broadly, what's your view now on the banks and financials as a space, purely, momentum and price action-wise?
Yeah, Prashant, good morning. Well, I think momentum price actions definitely stays positive. As we see it, I think additional fund flows coming into the market is getting deployed into this particular space. Also because of the weight adjustment that they would carry out. So certainly, I think since the BFSI space, in particular, I think the private banks are carrying higher amount of growth trajectory. So certainly more amount of funds are getting allotted to them. I would not be completely surprised. I think if we continue to see the additional amount of money coming into this particular space. Largely because of fundamental factors on which we keep track of, 20% kind of a growth, which we are seeing in corporate loan book, in retail loan book, and in housing finance. So all in all put together, I think we are getting the clarity that in next few quarters through, I think we are likely to see higher amount of growth continuing for them. And as a result of it, most of the banks and the NBFCs, the larger ones, they would probably show relatively better performance. Considering the fact that the price to book value ratio remains, I think, relatively on a average size, it is not so expensive in most of the cases. So I would think that there would be a scope for at least some percentage appreciation from here, close to around 20% from here on.
Okay, all right. Devin, hi, good morning. I wanted your thoughts on a couple of other stocks as well, right? I mean, I don't know if you've tracked Mankind Pharma. It's a new listing, but very strong numbers first quarter post listing. Numbers are looking pretty solid this time around. Any thoughts here on someone who's perhaps missed out on the IPO? Is there still more to go?
Thanks, Sonia. Good morning. Well, yes, I haven't, I think, gone into details of the numbers, but on the face of it, the numbers looks definitely promising. The company definitely, I think, came with an IPO and I think with a good amount of promise on the business side as well on both verticals. So from that perspective, definitely one would like to study them in detail and take a view thereafter.
Okay. Just stay on, Devin. We'll come back to you in a bit because I also wanted your thoughts on Suzlon. That's the first corporate that we're looking at. The company ended FY23 on a very strong note. Their margins expanded while they posted a net profit in Q4 versus a loss on a year-on-year basis. Himanshu Modi, who is the CFO at Suzlon Energy, joins us now to talk more about their Q4 numbers. Also, there is this transmission fee waiver on wind projects. We spoke to Inox Wind about it yesterday, and they were very bullish on the way forward for the industry. So let's find out more about that. Thanks a lot for joining us, Mr. Modi. Good morning to you. First, before asking you about your business itself, can you tell us this proposal to waive off transmission fees? Will it impact Suzlon in any way? I understand that this is mostly for green hydrogen and ammonia-based projects. So what percentage of your own business comes from this area, and what could the likely savings be, if at all, in the near term? Any numbers that you can share with us?
So whilst, I don't see any immediate short-term or medium-term impact, but as you rightly said, it is for green ammonia and hydrogen, but one must understand that emission or generation of green ammonia or hydrogen, wind as a back-end source is also will play an important role into it. So certainly a positive policy move in the long term for the sector.
In terms of earnings, can you tell us a little bit about what FY24 is going to shape up like? In terms of transition of projects, closure of a lot of issues in the company, like the rights issue, etc., the debt reduction targets. Can you give us some milestones on what FY24 would look like?
So as we announced our order book, cumulatively we are sitting on to about 1.5 gigawatts of orders which are confirmed. And a large part of those, close to 50% plus of those orders are for FY24 within the company. So far as the balance sheet is concerned, now the balance sheet has been completely streamlined. We now reported a net debt of close to 1,200 crores with cash on the books of close to about 700 crores. So a gross debt of 1,900. This, of course, has come down significantly by way of use of rights proceeds towards debt repayment, plus our own internal cash flow sources that have been used to repay down the debt. So from a debt perspective, I think the company is now at a very comfortable position, and we've ended FY23 with a very strong balance sheet. Our net worth has been positive and turned around a positive of 1,100 crores almost after a decade. Our PAT on the consolidated basis for FY23 for 167 crores, that has been a PAT almost after 6 years on a operational basis for the company. So I think the balance sheet and financial woes for the company are now totally behind us. Looking forward, our order book, as I said, 1.5 gigawatts already under our belt, and active negotiations on for a significant order book uptake as well. So
Mr.
going forward,
Modi,
performance focus.
Yeah. Mr. Modi, what does this translate? What is the value of these orders?
Difficult for me to quantify that right now, but certainly as you see...
In the ballpark, Mr. Modi, how much, what's the size?
So just to help you drop by ballpark, this year we did 664 megawatts in orders in FY23. And as I said, out of the 1.5 gigawatt, close to about 50 to 60% of that is already for FY24. So we already have about 750 to 800 megawatts of orders for FY24. So if you were to extrapolate...
You did revenues of about just under 6,000 crores in FY23. So you should be able to do about 8,000 crores in revenues, FY24?
That's right. By way of extrapolation, yes, that's good.
Okay. And what about margins in on these orders in FY24?
Well, margins should strengthen, as you saw a significant uptick on our Q4 margins. So, we've also been very picky and selective about the orders that we intake, where we have, margins in play. So I think on a console basis, we should continue to be able to maintain the margins that we've reported for Q4.
Just a quick last question, Mr. Modi. This waiver of the interstate transmission fee, to what extent does that help you? Is there a quantifiable range that you can share?
So one must understand that the waiver of ISTS, has been available to the C&I customers on solar and wind already for projects that get under execution till 2025. The waiver policy that got announced a couple of days back for offshore wind, green hydrogen and ammonia, these are typically our customers are the ones who benefit. The way it helps us is in higher increased order book and certainly better margins for those orders. So the industry, which has been in a downturn for last 5 to 6 years, as a result of these policy initiatives by the Government of India, we should see significant uptick in the industry sentiments and performance over the next few years, triggered by these policy initiatives.
Mr. Modi, just one last thing very briefly. You said you're in negotiations for significantly more orders. Again, could you give us a sense of this? How large is this pipeline for you specifically?
Difficult for me to give you a sense, but obviously, we will announce those orders as we have under the listing guidelines. But, right now, difficult for me to put a number on those.
In 23, how much did you take in as new orders?
So in 23, because 23 was more a year of coming out of the financial issues for the company. As you can see, in 22, we had a debt of close to 6,000 crores and we're ending the year at about close to 1,900 crores. So it's been a significant reduction in debt for the company. So it was more a year of consolidation for the company. But now with the debt issues behind us, we have now started our business development activities quite aggressively. And that is reflected in the strong order book pipeline that we have available.
Got it. Mr. Modi, thank you very much. Appreciate you joining in. And good luck, sir. Good chat, as always. There is a SEBI paper which is out with regards to looking at enhancing transparency for foreign portfolio investors. More on that in a bit from now. We'll take a quick break here. We are back. Anuj should be with us on the other side with a quick trade setup. Our technical analysts come up as well with trades for the day.
दुनिया में कुछ लोग कहते हैं और कुछ लोग करते हैं। जब कहा गया देश में सोलर पावर सफल नहीं हो सकता, तो हमने सुना नहीं, उसे सफल कर दिखाया। कहा देश का सबसे बड़ा पावर प्लांट बनाना इम्पॉसिबल, तो हमने पॉसिबल कर दिया। बोला कोने कोने तक बिजली पहुंचाना किसी के बस की बात नहीं, हमने पहुंचा दी। सवाल उठे एनवायरमेंट फ्रेंडली गैस सब तक कैसे पहुंचेगी? हमने वो भी पहुंचा दी। कहा तो ये भी गया पैकेज फूड बिजनेस हमसे नहीं हो पाएगा, लेकिन हमने कर दिखाया। बातें उठी सीमेंट सेक्टर में हम कभी स्ट्रांग नहीं बन सकते, तो हमने सुना नहीं, बन के दिखाया। चर्चा हुई देश में इतना बड़ा पोर्ट बनाना असंभव, हमने संभव कर दिखाया। और जब कहा गया देश के एयरपोर्ट्स इंटरनेशनल स्टैंडर्ड्स के नहीं हो सकते, तब भी हमने सुना नहीं, कर दिए। मुश्किलों की नहीं सुनते, हम करके दिखाते हैं। अदानी, हम करके दिखाते हैं।
Yes, it's okay for us to nod for everything. Because we are parrots. Yes, but your wealth manager? Shouldn't be doing that. You know?
Choose Nuvama. We only do what's right for you and your money. Nuvama. Let's do it right.
Welcome back. Anuj is here in the studios with a quick check on how he's looking at things. SGX is indicating a bit of a pullback. Anuj, morning.
Morning, Prashant. Well, again, I'll maintain the same point I made yesterday as well. The market showing some signs of a near-term top. Not reversal yet, but near-term top. Advanced decline, for example, yesterday was negative and has been weak for last couple of days. Even the previous day when the market had a big rally, advanced decline was barely in favor of the advances. And, one more thing, we just did analysis of that on Awaz as well. There's been a lot of promoter selling in recent, few block deals. And today we have two. For example, you have Sona and HDFC Life. Before that, you have Mahindra CIE, where M&M had checked out, Vedant Fashions, Clean Sciences, Star Health, Syngene. There's so many where promoters have been selling stake. That normally sometimes is an indicator of a market forming a near-term peak. Just like in March, you had some creeping acquisitions, which was perhaps an indicator of some kind of near-term bottom. The Nifty is just 1.3% away from all-time highs. It's not shown signs of shorting yet, but you're so close to all-time highs, and because of these all block deals and all, my sense is the risk-reward is not in favor of creating a fresh long. If you are long, then perhaps you want to still not exit, you want to trail your stop loss or hedge your positions. As far as today's cues go, of course, there's Congress voting likely today on debt deal. That's very important. The US market, by the way, was nowhere close to what the futures were indicating a couple of days back. Earnings season is now officially over, so in terms of domestic cues, now you wait for the RBI policy, and that happens on June 6 to 8. I think that's going to be important. It's possible that the market goes through maybe some kind of consolidation, though of course the FI buying is still intact, and that's largely pumping in money in the large caps, and that's where the valuations are also getting slightly uncomfortable. So as I said, maybe at these levels you want to be a bit cautious.
Okay, you want to be a bit cautious at these levels. Got that. Thanks a lot, Anuj, for joining in and giving us an update. Let's do one thing. Deven Choksi is still with us, so let's get a couple of views going from him. Deven, I wanted your thoughts on some of these real estate players. They have been doing very well. Sobha, you have Prestige. But is the run done here, or do you think there could be more to go?
I think the business continues for them, both on the affordable housing side, the mid-tier housing segment, as well as I think the premium housing segment. Most of these companies are having good amount of visibility as far as I think project execution is concerned. From company to company, of course, it differs, and I think one would probably see in different pockets. I think some of the companies are having niche like Shova and Prestige, I think would have niche in their own market share. Whereas I think the Mumbai market would have the likes of Godrej and Oberoi would probably creating a significant amount of visibility as far as the business is concerned. In my viewpoint, I think the companies are adequately priced at this point of time. Maybe if one is looking at these companies to stay in the portfolio, some corrective fall in the stock price would probably mean that buying opportunity is once again emerging. However, for investment purpose, we have always liked housing finance as a space which provides a steady rate of return and a visibility, where the growth in the AUM is also 20% and above. And as a result of which, I think these companies provide you the clarity as far as the earnings are concerned going forward on at least I think few many years. So we remain bullish, but we are selectively bullish with housing finance companies per se within real estate space.
All right. Thanks a lot for that. Deven, have a good day. So selectively bullish on housing finance companies in the real estate space. Got that. Very important developments coming in from SEBI, and we'll just get to that paper in just a bit. In the meantime, we also have our technical experts joining in. Mitesh Thakkar and Sudarshan Sukhani are with us this morning. Sudarshan, let me start with you. It is an interesting, juncture that we are at, almost at new highs, but not quite there yet. How are you feeling about the market? Do you think some retracement is in sight? And what is the approach for today?
Yeah, good morning, Sonia. See, the markets are almost at new highs, as you said. The trend is very clearly up. At 18,600, we cannot be bearish on the markets. What we can say, and that's what we said yesterday also, is that the markets have had a big rally in the last 4 days. Now, as usual, the markets will go through into a huddle. They'll relax. They will go into a sideways range. So in this range, the trade is still only to buy. Don't even dream of short selling. But you must buy only on sharp dips. For intraday traders, the trade was to buy on a 100-point Nifty dip. Yesterday, that did not come. Dip did not come. No problems. Today also, if you get 100 points lower from the open, then you consider buying. For positional traders, the trade is to buy somewhere around 18,350. If it doesn't come, you wait.
Okay. Good morning, gentlemen. Mitesh, what's your sense this morning?
I think a very similar kind of outlook. I think the overall directional bias image on the long side, the medium-term indicators are very positive. But in the short term, there's mild tiredness which is emerging on the indices, and therefore I think buying at current levels may not be a good idea. I think wait for some meaningful dip to play out. What we'll do today is that possibly prune down a long position on the indices, wait for a dip to come in, and after selling about 50%, we would want to buy 50% quantity at lower levels. So 18,525, 520 is my entry zone on the Nifty, and about 44,200, 150 area is the entry zone on the Bank Nifty. If that dip comes good enough, otherwise then we'll just stay light, because some of the hourly indicators are tiring now, and I think that suggests that there could be either a consolidation or maybe a pullback and a correction.
Right. What about individual stocks? Let's get straight to that then. Mitesh, what would be on your list this morning?
I have two buys and two sells. Good morning, Sonia. I have a buy on HAL with a stop at 30.60 for targets of 31.90, and a buy on Oro Pharma with a stop at 6.40 for targets of 6.75. On the selling side is ONGC, stop at 162, targets of 153, and Chambal Fertilizers, stop at 285, targets of 270.
And Sudarshan, what about you?
Well, it's not a good day for individual stocks also. That rarely happens, but I think there'll be a lot of choppiness possible. So traders should be aware of that possibility. In any case, Britannia is an intraday short. It's a short with a stop above 46.25. GAIL is another intraday short, stop above 107. Pidilite Industries is a buying opportunity. Even the buys have to be made only on dips. Don't rush into them. Stop under 25.72. And SBI Cards, which is making new highs, is a buy, but it's a positional buy. So keep a stop under 905. Again, buy on a dip.
All right. Thanks a lot for that, gentlemen. Well, there is this latest news flow that's coming from SEBI, where they've released a paper to address the possible circumvention of the MPS norms, which is the minimum public shareholding norms. Basically, this paper seeks enhanced transparency measures for foreign portfolio investors. And they talk about how FPI ownership should be identified on a look-through basis. FPIs with over 50% of AUM in one group needs more disclosure. So this is looking for, the SEBI is looking for enhanced transparency. We'll do one thing. We'll take a short break. We'll get an expert to, look through this paper, get you the fine print and tell us what to make of it. Sandeep Parekh of FinSec Law Advisors will be joining in just moments from now. We'll also talk about the other top stocks to focus on today.